Morning, it's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Today is a sad day for us Indians. The terrorist attack on tourists in Pahalgam yesterday was one of the worst terror attacks in the last 30 years, and things are still going on. We hopefully we shall, end it soon. And my heart goes to all people who are and the families who have been affected by this. I think it's time to tighten our security belt. Generally, tourists have not been affected in the past, but this is one of those rare times when tourists have been affected, and that will have some impact on our economy in some sense, I would say. I'll talk about how terrorist attacks have affected Indian markets and global markets. But before that, let's do a quick run through. So Nifty hit this year's high, for instance. ITC and HUL surprisingly were the leaders. FMCG is generally not a great sector to be in. Mid cap hit a 3 month high. Small caps hit a 2 month high. Realty also is doing very well. It had hit a 2 month high, and FMCG, as I said, surprise, is in the lead. And Nifty PSU banks, led by central banks, did very well yesterday. Uh, Nifty Bank continue to hit record highs. So I think that, as I've been saying, that banks are the place to be in. And of course, yesterday everything was in great form. Pharma, auto, IT. Only IT closed in the red. We are very bearish on IT, and IT will, I think, underperform this market, which now is slowly and steadily getting into the strong bullish orbit. The strong buyers come in at every decline. Yesterday, too, morning we had a decline, and immediately it was locked up. And energy came down, and I think these were the two major sectors which struggled. FIs continued to buy about 1,290. If you observe in the last 1 month, the FIs have been regular buyers, and they're buying despite DII selling. Uh, then, if you look at where are we as far as the year-to-date performance, we started very badly, and slowly and steadily we have now reached a positive. If you observe, we are in the last Nifty 50 is up 0.9% for the year, that year to date, and in dollars terms, it's 0.8%. S&P and the Nasdaq lead the negative leaderboard, 10% on S&P and about 16% on the Nasdaq. So we are definitely far better. Of course, Kospi and FTSE, the FTSE and Bovespa, that the Brazilian index as well as the Italian index have done much better. Hang Seng also has done very well, actually, 6.7%. But we are at least much better than what we were, say, in February end. We were in the worst performing market, and it was February. So IMF has come out with this paper. They're lowering their forecast globally because of the global trade measures. I think because of the global trade measures, everybody is lowering their profit forecast, and so is IMF. Just let's look at what RBI bulletin which came in yesterday. They say the reciprocal tariff by US will adversely impact India's external demand. Now, I believe strongly that reciprocal tariffs will come down significantly. They no longer remain 26%. I have been mentioning this. I won't be surprised even if it is zero or reciprocal tariffs or 5%, whereas the baseline tariff will remain at 10%. That is where the moolah for the US will come, and that I think won't go. So we have to gear ourselves with the 10% base tariff plus a little bit of reciprocal tariff. Since January, RBI is putting in money, so that is why now liquidity is positive, and that is why the markets are also having this comfort that RBI will come and supply liquidity, and therefore the banks are doing much better. RBI also is positive that they will benefit from supply chain realignments. I think that is what the general mood is. That once the supply chain realignment happens, India will be the biggest beneficiary. So farm prospects also have been improving because the above monsoon forecast is there as far as RBI is concerned. This is on the steel industry. They put a safeguard duty up to 200 days. They will take a call on it. Final recommendation will come by August, September is what the steel secretary says. But there is a research report which says already our local steel prices are higher than the import. So even if they raise import duty, it will not make much of a difference. Is what the local there is a broking report yesterday. That's why yesterday steel prices fell off from their highs. The opening highs were the highs. Then the first of the small finance banks have come with reports. AU Small Finance Bank. We don't hold this stock, but it has come with spectacular results. Interest income up by 50%, profit after tax by 36%, NII up by 56%. I expect banks to report this kind of results, especially the mid and smaller banks. IndusInd Bank has again got into trouble. There is another forensic audit for 600 crores. This is a microfinance related. So yesterday, IndusInd Bank was down, and I think that will be under pressure. We used to own it. We booked a loss in that, and we have written off our investment there. Now, this is another thing which I wanted to talk about. Gold. Gold has been my favorite go-to. We had 40% of our portfolio in gold and silver, and we reduced last week. And yesterday, we have completely gone out of gold. If you look at it, it's gone like a parabola. Generally, a parabola when it breaks, it breaks quite badly. I don't know whether it will break that badly in gold, but I'm certainly not bullish on gold, at least for a few weeks to months now. Of course, because of global implications, gold may still go further, but right now I'm a little bit cautious. So we moved out from gold to copper, as I mentioned. Copper is the new gold, but this parabola is a little bit unnerving, especially in the last 10 days when from 2,700 the gold prices in US went up to 3,500, which is I thought quite some distance. Normally, gold doesn't do that, but it is almost like a vertical rise. You should see. I will be surprised if you don't see 2,800 to 3,000 in the next few weeks to months. We don't know what will happen to silver because of this, but we hold silver. We continue to hold silver. So this is the impact of terrorism on financial markets. There's a paper. So evidence from Asia. This is the paper. If somebody is interested, they can go and check it out. The abstract basically talks of them. We have seen the 410 terrorist attacks in 5 Asian stock markets. Generally, it has a significant impact on most of the times. But what I have found out is very slightly different. That these guys talk about the magnitude will differ. Of course, magnitude will differ with respect to the country, the attack type, and target type, and the severity of the attacks. For instance, in 9/11 in US, the attack was severe. It changed the global outlook towards terrorism. Stock markets closed 4 days there, and but it bottomed out soon after closure, and then it went on for a relief rally for about 6 months. That was the 9/11. And we've had attacks in 2005, train attacks in Europe. The stock markets did not really flinch too much for the day, and then it started moving up. We had the 2001 Parliament attack, and that affected us for quite some time because India wanted to go to war with Pakistan on that. And if you look at what happened here, the last one was the 26, 29, 11, which happened in 2008, where the terrorists attacked and lots of people were killed. It was a major headline grabbing event. But surprisingly, the day before the attack, on 26th, it closed positively, and the attack happened in the evening, and the entire operation was closed by 29/11. But next day, actually, it closed positively in terms of opening. It opened lower, and then but it closed better. But if you observe, we were in a downtrend that time. We were in a bear market. So we were just about to go up, but that attack stopped us, but not for long. It only for 2 3 days, and then it went up after that. So severe attack on Bombay in 26/11. We still the market still shrugged it off. Shrugged it off. This is the Pulwama attack here. This was in 2019. The market was going up steadily after a very, very big fall in 2018 in September because of the ILFS scandal. It had fallen down, and then it was slowly and steadily going up. On the day of the attack, it was down, and that was the bottom actually. 2019, the attack that day was the bottom, and then the market took off from there. So we have instances in India. For instance, these two instances are there. Parliament attack in 2001, of course, the markets fell down. These recent two attacks, the large attacks, 2008 and 2019, and both of the time the markets shrugged it off and started going up soon after that. So we have to see what happens this time. We are in the same situation as what the Pulwama attack time, and I feel that we may be able to, manage this just like what we happened in Pulwama. But it's a serious issue. I'm sure something will be done, but we need to keep a close watch on the defense, what our government will do, and I hope whatever they do will be successful. I'm very confident about that. So I will be a little cautious today. I'll just wait and watch because yesterday there was selling from 11:30 is what I noticed. So we may have some volatility on the downside today, though the global markets are all up. The futures are up because there is some talk from some news item from Reuters which says Chinese President Xi and Trump will meet in May. I'm very confident that the deal will go through. I don't expect this problem to last between China and US, but nevertheless, the markets will be volatile. We have to face our own volatility today. So whatever you do, I hope it is successful. Thank you for joining me.